Simply put, you might be watching the wrong central bank. Most crypto investors are glued to the US federal funds rate, watching every word Jerome Powell says. But if you look at the historical data, Bitcoin's price actually has a much tighter correlation with something else entirely: the Chinese 10-year government bond yield. I know, bond yields sound about as exciting as watching paint dry, but stick with me. According to analysis from researchers like TechDev, local tops in the Chinese 10-year yield often align perfectly with Bitcoin impulse peaks. Why would this be? Well, it comes down to global liquidity. When China stimulates, they expand their money supply, or M2. And research shows that Bitcoin has a 94% correlation with global liquidity over the long term. Currently, the US Fed is cutting rates, yes, but China is in a unique position. Their economy is struggling with deflation and a real estate crisis. They have no choice but to keep liquidity loose. While the Fed is trying to stick to a soft landing, China is trying to prevent a crash landing. And historically, when the East turns on the liquidity taps, Bitcoin tends to float higher. Simply put, you might be watching the wrong central bank.